Hey guys, I'm going to show you how the hedge funds and short sellers are planning to crash AMC stock by using APE stock. And you're going to want to watch this video to the very end to see how it's going to play out. And even if you think this may be FUD and you're bullish on the stock, you still want to understand what's likely to happen. So watch the video and remember to like, share, and subscribe. And I'm going to dive into how this is going to work. So basically, as we know, there's the two different classes of shares. Your APE shares right now trading at $1.22 at the time of this video, and your AMC shares trading at $7.51. We also know the shares outstanding for each. There's slightly more APE shares. AbbVie's issued a few more of them since they've been released, but not very many, at 519 million and 513 million AMC shares. And we also know one share equals one vote. How do we know this? Well, according to their FAQ on their website, we know this as one share of AMC or one share of APE lets you vote on the directors, other corporate matters, and gives you the vote to issue more common stock. So then the question is, what comes to a lot of people's minds is, will APE shares be converted to AMC shares? Well, if they say technically yes, but they say it's not going to happen anytime soon, since first, the AMC board has to propose it, and then the investors have to vote on it. And as we know, the AMC investors did not approve the vote to issue more common stock of AMC, which is precisely why these APE shares were created. Next, how many AMC preferred equity units are there going to be? How much APE stock can there be? Well, right now, they're only authorized to issue 1 billion of these shares, which already, as we know, 519 are issued. So they can issue about 480 million more, and if they want, the board can currently authorize to issue up to 5 billion. So if more shares are issued, the APE shareholders will control the vote of AMC and get to have the deciding factor on all corporate matters we just discussed. So now let's dive into the financials, where I'm going to show you without a doubt that more APE shares will need to be issued. So I know a lot of people have been hearing good things about AMC. They beat on their last earnings. The movie theaters have been going hot. The business is coming back. But despite all of that, they're still losing hundreds of millions of dollars per quarter. In fact, they lost 227 million last quarter. And in the last year, they lost $820 million, which is a lot of money. And this is largely because of their extremely high interest expense because of all the debt they've had to take on. As you can see, in the last year, they had to pay $375 million in interest expense, which is close to almost $100 million a quarter. So even if they pay down a little bit of the debt, we're still looking going forward at $350+ million in interest expenses per year. And practically, they're not going to be able to pay that off, even if they get the business back on track. If we look back to previous years, such as 2018 and 2019, when they were doing over $5.4 billion in revenue, when right now they're just doing over $4 billion, they're only able to make $310 million in operating income and $236 million. This is the money they make before they pay off the interest. So even if they got back to their peak high before, they're still going to be losing money after interest. So to be able to pay this off with the current debt, they're going to have to increase their revenue far beyond what they have in the past. And now, onto their balance sheet. They did raise a lot of money originally when they issued AMC stock last year. But as we just went over, they're losing money, and this cash pile has been dwindling down quite significantly. In fact, they only have $665 million left in cash with about a $220 million credit line. So they have less than $1 billion. And as we know, in the last quarter, they just lost $227 million. This interest expense problem all comes down to their long-term debt they have. As you can see, is currently sitting at $5.2 billion. And even though they've used a lot of this cash they received to pay it down, this is still an astronomical amount of debt they need to pay off if they want to get that interest expense down so they can make money in the future. So here we have the exact breakdown of all the debt they have, the long-term debt, that $5.2 billion. And as you can see, there's various different notes of this and that. I'm not going to get too much into it at different interest rates, just a few key points. The big part, the $1.9 billion, this is a variable rate credit line essentially, which is as the Fed's funds rate go up, it means their interest goes up. And it's about whatever the Fed's funds rate is, plus about 3% additionally. So, well, last year, it was only costing them about 3.1%. This year now, it's costing them 5.7%. And if interest rates go up further, this could be costing them 7+%. And currently, with their $5.2 billion in debt with $375 in interest, this is effective interest rate of 7.2%. And just to be able to service that debt, that would mean they would now need to do $5.2 billion in sales with a 7.2% operating margin. And they would need to do better than that if their interest expense goes up because the Fed's funds rate goes up as well. Unfortunately, AMC is not profitable now, and they're not expected to be profitable in the future either, but they are improving very slowly going forward. So I've taken the analyst estimates here, which I think are pretty fair. If economic conditions get worse and there is a recession, these could actually be a lot worse than what's even being estimated here. So in Q4, which is the 2022, the quarter we're already in, they're expected to lose between 62 and 196 million. And in full 2023, they're expected to lose between 165 and 548 million. So between these two numbers, by the end of next year, they're going to have burned through almost all, if not all, of their cash and the remaining credit line. And it's at this point, they're most likely going to be forced to issue APE shares if they haven't already issued them to pay down some debt. And in this case, if they waited that long, just to continue paying off their interest expense going into 2024. Now let's look at how many APE shares are they going to have to issue to raise capital. Well, right now with the trading $1.22, I frankly think if they have to do a large issuance, it's going to go a lot lower, because right now APE has crashed from its original $8 or $9, $10, all the way down to $1.22 with almost no additional shares being issued. So if we look at it that they issued APE at $1, just the remaining current authorized shares, which is 480 million, they would raise $480 million. And if APE stock got lower, this may drive it down, because as they sell more, it would push the price lower. They may only be able to raise $120 million. And this would leave the APE shareholders with 66% of the vote and AMC shareholders with 34% of the vote. So even at this point, if they just issue that remaining 480 million shares, the APE shareholders would definitely have the controlling majority vote of the company. And now let's look at if they issued the full $5 billion. Well, if they issue the full $5 billion, I can guarantee you the APE prices are going to be going lower, because that's a lot of shares, and there's currently only 500 million shares. So if we're 10 timesing that, I'm looking at 25 cents, maybe 10 cents, and 5 cents. So at 25 cents, they would get $1.12 billion. At 10 cents, 448 million, and 5 cents, 224 million. And even if they got this 25 cents for the $1.1 billion there, that would only pay off about 20% of their debt. So you can kind of look at this, that even if they got more than these expectations, they're only going to be able to put a small dent in their debt. And at this point of issuing the 5 billion shares, the APE shareholders would control 90% of the vote. AMC shareholders would basically have no say in the company anymore. So now how hedge funds will crash AMC stock using the APE stock. And this comes down to how institutional investors think. So here's an article of the famed short seller Jim Chanos spotting the arbitrage opportunity. And since this article was originally posted, the arbitrage has even got wider and wider, and I personally think will continue to get a lot wider. And this just gives you an idea of what the big money's thinking. When they see that, hey, I can buy 2 shares, which are basically economically equivalent, both give me 1 vote, I can buy one for 122 or buy one for 751. Well, I'm going to short the one for 751, and I'm going to buy the one for $1.22. So this is a hypothetical example, the numbers at least, about the process of how this would work. So you would have a big hedge fund or short seller where they're already short AMC shares or not. They buy, 500 million of these APE shares, say at 25 cents for $120 million. Then if they're already short AMC shares, or for example, they short 50 million AMC shares for $7.50. Now, because there's so many more APE shares out there, they have a large portion of the vote. Them and some other funds doing the same thing, they can vote to convert all their APE shares over to AMC shares. And boom, their short is covered. They instantly make hundreds of millions of dollars in profit, and they still have the majority of the APE shares, giving them the control of the vote, so they could issue as many shares as they wanted. So if you believe there's a lot of synthetic shares and this and that out there. They could effectively issue unlimited AMC shares, diluting the stock and providing all the shares needed for their friends to cover. And under the guise of, oh, we need to issue these shares to pay down the long-term debt for the fruitfulness of the company going forward. So, and if this happens, it's going to cause the stock price to crash. Probably at the point when APE shares are converted over to AMC shares, AMC shares will basically be worth what APE shares are at that point. Let me know your thoughts of all of this. Leave a comment below. What do you think the hedge funds and short sellers will do going forward? And even if you think this is FUD, please like, share, and subscribe. I'm just trying to put out some good, unique, interesting content about there. And if there's some interest in this video, I'll do a full fundamental analysis on AMC, breaking down a reasonable share price of where they could be going forward in the future.